Good morning, team. It is Wednesday. Today is honestly easily the biggest day of the week. We got a lot of news going on. NASDAQ is over 25,000. Oil's still somewhat elevated though. But today we have PPI inflation data at 8:30, and then we have the big FOMC meeting and decision really at 2 p.m. in the FOMC meeting at 2:30 p.m. Now, it's widely expected the Fed does not cut interest rates today. So we're not cutting interest rates today. I can just tell you this now. But we do have what's called the summary of economic projections going live at 2 p.m., which is going to show us where the Fed is seeing the future of rates this year and beyond. And so that's the big story of the day, the summary of economic projections and the dot plot, as well as Jerome Powell's testimony. Now, inflation has been sticky. The last PPI inflation number that we got was elevated. It was higher than expected, if I remember this correctly, and I think I do. But I'm pretty sure the last data we got for this was elevated data, if I remember this correctly here. If we look at Market Watch, PPI inflation data was up last time. Let's take a look. So PPI inflation previously was 0.3% and 0.5%. Year over year is 2.9%. I believe core was 3.1%, but no, core. Wait. Let me make previously. Yeah, it says previously it was 0.5%. Core was 0.3%, and year over year was 2.9%. For the last PPI inflation report. I'm pretty sure I posted this on X as well, but yeah, it was sticky last time. And this is heading into, the first Fed meeting we've gotten since this Iran conflict started. And oil has been much higher here. Here's WTI Brent crude, or WTI crude. You could look at it. It's at 94s. It's starting to stabilize over the last few days, but we did get more macroeconomic stuff happen. And so, it's relevant to pay attention to some of this stuff. The ongoing war in Iran, obviously a key overhang with everything going on. Markets are focused on oil disruptions, supply and shipping through the Strait of Hormuz, and what that means for energy cost and global inflation. Because this is going to spike. This conflict is going to spike global inflation everywhere. Brent crude is up over $100 a barrel still, I believe. And but yeah, you can look at this chart and see we have seen crude dip over the last few days. The latest leg has seen crude kind of ease off from the recent highs after some of the accommodation on regional and production shipping. It's helping futures this morning. NASDAQ is green. Traders are kind of fading the worst case energy scenarios here. And yeah, we'll see what happens. NASDAQ, again, pretty strong. Equities are pretty up. Today, NASDAQ, you can see here's the last few days this week on the NASDAQ. The NASDAQ has seen multiple green days this week. Hopefully you guys still aren't hungover from St. Patty's Day. But, yeah. Fixed income and FX positioning still reflected geopolitical risk, though. Higher treasury yields, if we look at them. Yields are actually, I think, down a little bit, if I remember correctly. With just kind of the stuff that we've seen over the last few days. Yeah, yields were at almost 4.25% at their peak, I think, over this conflict. Yeah, the last few days as NASDAQ has run, yields have fallen down here. So it doesn't necessarily mean like we're getting earlier cuts. It just means that oil stabilized, worries there have stabilized. But at the same time, the president's still struggling to find unison in the Iran conflict from other countries. Like, other countries have not been willing to work with him as much as he thought they would. And yeah, again, that's heading into today's PPI inflation print at 8:30 Eastern Standard Time. 8:30, we get PPI inflation. This is a really important report. Last one was elevated. And yeah, this is the first. And this is relatively recent. This is just from February. So this is February producer business inflation. The last print we got out was in February. You can see it was elevated here if you look at this. So you can see we were up big on this. If we take a look, last PPI inflation print, 0.5 versus 0.3% expected. year over year, 2.9 versus 2.6% expected last time. Core 0.8 versus 0.3% expected month over month. So that was high as well. And this is after a lot of fears are here regarding oil. So yeah, what's up, Blaze? What's up, Trader? What's up, Art of Reed? Big Slum, Gamer, Digital. What's up, guys? Yeah, it's PPI day today. Dividend said, yo, decided to give it another shot after yesterday. Since options and theta are burning out, passing an eval last night. Hey, congrats, man. That's good. That's good. Passing an eval is always good. Let me see if I can expand this comment thing. Yeah. What's up, Jay? Yeah, so I believe this will be his last Fed meeting. Now, there is some hiccups here regarding this, though. Like, if we look at the Fed watch tool, we can take a look at this now. Where'd it go? Oh. Yeah, we can take a look at the FOMC Fed watch tool. Yeah, so if we look at this here, still very low odds, 1% chance that we cut interest rates today. Still a 1% shot, so very unlikely we are going to be cutting rates today. Inflation going to tell us we are in a recession for sure today? I disagree, but maybe. You know, we'll see. PPI inflation, I don't know if that's going to tell us, but maybe. So, I'm sorry. So, he has one more pawn in April. Today's not the last one. He's got one more in April. So, he has today's FOMC decision, and then he's got one more meeting at the end of April. He steps down in May. But the thing about it is that Warsh is the next nominee for the Fed chairman. But they said they would not appoint him basically right now. So like the president's having disagreements regarding whether they're going to nominate, whether they're going to officially put in Warsh. And if they don't put in Warsh, like if they don't get both sides working with each other by then, because we're in the midst of the DHS shutdown and things are kind of getting heated on the political front because of that. If they do not get Warsh in there, Jerome Powell will continue as chairman. He's already Fed governor. He's already going to be able to vote, potentially pass his term. And if they don't get Warsh in there, Powell's going to stay on. And so we'll see. It's low odds right now. It's only maybe like less than 5% likely that happens, but it's a possibility. And so it's worth just understanding it's a possibility. I see somebody asking, what's the significance of PPI inflation? So PPI inflation is business wholesale producer inflation. So this is wholesale business producer inflation. And because of that, it's relevant. Like this is relevant inflation, as well as it's data, because a lot of the time producers will get certain prices and maintain certain prices. And then those prices will get passed on to consumers. And so producer prices can be a foreshadowing of consumer prices, if that makes sense. And last time we got a high print. Now, core showed up month over month at 0.8% last time. If we look at this here, did it show up at 0.8%? Now it's saying it's 0.3%. I think when we originally got it last month, it said 0.8%. So Market Watch might actually be wrong. Let me check a different source here. I remember showing 0.8% when they did it last time, and I thought that was really bad. But I gotta check another source. Yeah, core PPI month over month last time showed up at 0.8 versus 0.3%, 0.2% expected here. Previous was 0.6%. And so core heated up last time. But remember, core excludes food and energy prices. So core excludes food and energy. And the big question mark regarding all this stuff is going to be the oil premiums that we're paying in the, right now because of elevated oil and crude prices. Here's crude. Just since this month started, you can see crude ripping up here. The month started, I believe, right here. Let me see. Yeah, the month started here. So this is oil prices since March, right here. Those are oil prices since March. You can see they were elevated a little bit from like the 50s range they were in prior. in February, so they were slightly elevated versus what we've seen over the last 6 months. You know, oil was down to $55 a barrel for WTI crude mid-late last year. Ahead of this in February, oil did start to move up. We had rumblings in the Middle East. We had a U.S.-Iran, a couple U.S.-Iran meetings. And if you remember the timeline for this, the U.S. and Iran met a couple different times trying to get a deal done. But basically, the U.S.'s position was that they were not going to let Iran have nuclear capabilities. And Iran was basically saying, hey, we're going to do this. You can watch us, basically. They said, hey, you can babysit us, but we're going to do this. And the U.S. was like, nope, we're not going to allow that happening. But for a little while, we thought we might get a deal done. So there was a specific timeline there where maybe things were a little bit more optimistic they would get a deal done. And then this conflict started, and here's the price of oil since then. And so the price of oil going up, especially Brent, and we can look at Brent crude here as well. But the price of oil being so high, it is something that Brent crude is the global standard of oil. WTI crude is more like relevant for potentially like US gas prices, but Brent is at 104s right now, 104.70s. If you look at a longer term chart here, you can look at like a daily chart. Here's where March started. So the global standard of oil is up significantly since this conflict started. And that's heading into, again, PPI inflation today, which is going to be for February, which is right before we saw these spikes. But more importantly, the FOMC decision and meeting that we have going on today, 2 p.m. Eastern Standard Time, is when we're going to get the summary of economic projections. And we'll see if Jerome Powell's tone will change to a much more hawkish, restrictive, inflation-fearing tone, or we'll see if they update the dot plot economic projections outlook as well. I don't have to leave your chat up, bro. We can always change your chat here. Hold on. And remember, guys, I'm just going to specify this real quick here. I am not an investment professional. We are not liable if you lose money. Always make your own assessment responsible. Or always make your own assessment, trade responsibly. We are not investment professionals here. Understand all this stuff on screen. I can't guarantee anything. Not financial advice. Nothing here is. Do not copy me. We are not liable if you lose. Make your own assessment. Trade smart. Don't copy me. And this is not financial advice. But yeah, let's see what happens, guys. Let's do a poll here this morning. Here's oil. Oil is spiking right now. So let's see breaking news. Make sure nothing happened that might influence this. Yeah, so Greer is speaking right now. Iran says parts of South Pars gas field was attacked, according to state TV. The president just spoke. He said, I wonder what would happen if we finished off what's left of the Iranian state and let countries that use it, and let the countries that use it, we don't, be responsible for the so-called strait that would get some of our non-responsive allies in gear and fast, end quote, U.S. President Trump. So Trump is speaking on social media, and U.S. Trade Representative Greer is also speaking right now as well. Greer says bilateral trade talks expected with European Union, Malaysia, and India. So yeah, if we look at Brent crude, I don't know if that yeah, look at Brent. Like, we saw a spike in oil from this. It's kind of retracing back down earlier this morning, though. Here's Brent down to 103.60s, but it did spike for a little while after this news came out. And then this is part of Iran's South Pars petrochemical facilities have been attacked. They say the Asaluya oil industry facilities were attacked as well. So part of South Pars gas field was attacked, according to state TV in Iran. They also said the Asaluya oil industry facilities were attacked as well. So that news is breaking here. And you can see oil spiking up on this news that just dropped. So So oil is up and elevated today. Yeah, we're down to 103.69s here on Brent crude. We popped as high as 105s, I'm showing here. So we're at 103.69s, but look at the spike just from the conflict news that we just got. I'm still looking deeper into this, guys, so bear with me here. But yeah. Trade Representative Greer still speaking. He says Section 338 appropriate in certain circumstances regarding tariffs. So Section 338 appropriate in certain circumstances, according to U.S. Trade Representative Greer. And again, he said bilateral trade talks expected with European Union, Malaysia, and India. But you can see WTI crude did spike over $95 a barrel this morning. So. Yeah, let's do a poll. I was just about to do a poll. Does today's CPI inflation print show higher or lower than the 0.3% expected? It's gonna be the question. Does today's PPI inflation print show higher or lower than 0.3%? Vote on the poll. Let me know what you guys think. And just to ask this question again, we usually get some pretty good responses. Where are you guys chatting from today? Where are you guys from? Let's hear it. I like doing this every day. It gives me a good sense of where everybody's from. I can appreciate it. Where are you guys from this morning? NASDAQ is going scuba. Yeah. I see San Diego. Las Vegas. I love Las Vegas. The old South Korea. Germany, Sweden, Missouri, Vietnam. Nice, Gary. Romania, Australia, Fort Worth, Los Angeles, the Philippines, Brooklyn. We see Cleveland in the house. Hey, I appreciate you guys. Lithuania, Iowa, Tibet. Honestly, I've watched some Everest documentaries. I saw that movie Everest, and then I watched some Everest documentaries. Tibet looks really nice. I mean, it's incredibly cold, but it looks really nice. Queens, nice. Sweden. My mom's basement. The Isle of Man. Houston, Texas. What's up, Legion? Thank you, brother. Michigan. Palestine. Work is good, bro. Work is good. We're up early today, and here in Houston, Texas, it is 6:35 in the morning here. 6:35 in the morning. We do have PPI inflation going live at 8:30 Eastern Standard Time. Yeah, I'm in Houston, Texas right now, but I'm a Louisianian at heart. I'm from Baton Rouge, Louisiana, originally. Go Tigers, you know. But yeah. Did you know there's a San Antonio, Florida? I feel like I might have, but Connecticut. I still haven't tried a New Haven pizza. Anyways, guys, let's take a look at the NASDAQ. NASDAQ here. Welcome. Look at the NASDAQ dip on these fears after these strikes were announced. Oil spiked up. NASDAQ dipping down. It's at 25,818. We can take a look at the S&P 500 here. S&P 500 is also down. We're at 67.92 here. 67.92. No, I wasn't laughing at the Isle of Man. I was laughing at a different comment that I saw right after that. Can you explain Witching Friday? Sure. Witching Friday, it's triple witching technically, is a day where markets can be volatile because of all three major contract types expiring same day. What do I mean by that? We have options with index options like S&P 500, NASDAQ, Dow, you know, really it would be like, yeah, we have index options expiring. We have single stock options. So we have like Tesla options, Nvidia options, Amazon options. They're expiring. And then we also have index futures like the S&P E-mini that you see on the chart is going to expire on on Friday. The NASDAQ, the NQ, the Dow Jones, which if you look at it, it is down with everything going on with all these strike news being announced. But yeah, so all three major contract types. It used to be called quad because you used to have single stock futures. So you used to be able to trade Apple futures, Nvidia futures. They got rid of that. They're actually bringing that back this summer. So they're bringing single stock futures back, I think, this summer. And so we will be seeing single stock futures again. And I'm personally excited because imagine trading in the prop space or futures. Even if you don't like the prop space, imagine trading in futures and being able to trade Nvidia futures. I'm personally going to love that. That should be coming back this summer. We will see that. We will see. I hope it comes back sooner more than later. Yeah. All right. So oil spiking, inflation creeping, and Bitcoin worried. Forbes says 93% of jobs can be done at least partly by AI. Okay, so again, we did get news earlier. The news that's really moving markets right now, what's dropping, here's the Dow. This is the Dow on my chart right now. The news that's dropping markets like this is news of strikes. Iran says its oil and gas assets were attacked, specifically the South Pars petrochemical facilities. And so, yeah, that is what's going on right now. So the South Pars facility, as well as the Asaluya oil industry facilities, were both attacked. This made oil spike. Here's the Dow. You can see the Dow is down. Because of the dynamic that we're seeing in markets lately, guys, is oil up, NASDAQ down generally. It can change, but you can see the NASDAQ dropping on this. You can see oil spiking up on this report. You can see what Brent did, although Brent is kind of giving a lot of it back. WTI crude has as well. Here's Brent, the global worldwide standard. You can see the spike from when these strikes were announced. Look at the spike here. And then we kind of stabilized. We're back down to 103s now for Brent crude. But still up, elevated, and, you know, markets are a little nervous here. So we'll see if we get some movement continuing. But yeah, Forbes also saying 93% of jobs can be done at least partially by AI. Yeah, I'll get a PPI timer up. What's up, Sam? I lost half my gains from overnight. Yeah, we have PPI inflation, and we have the big FOMC decision today. The decision's not really big. It's widely expected, and markets are already pricing in on a pause today. But, you know, there's a couple things to talk about. All right, there's a couple things to talk about. In 2026, the Federal Reserve has already been cautious. So in 2026, the Fed has already been cautious. The war in Iran should heighten their sense of caution, really. Like, they should have more caution now because of the oil premiums that we're going to be paying because of this conflict, and that we already are paying, really, if you've looked at gas prices, because of this conflict, which threatens to keep inflation sticky and ultimately pushes back the odds of rate cuts this year. Remember, with the Federal Reserve, officials are focused on two specific things. They're focused on inflation and employment. And because it is unclear how much the rise in gas and oil prices are going to impact inflation, you know, it's not something where they're going to be as willing and eager to cut interest rates this year. Current policy in the Fed in regards to the federal funds rate is 3.5 for the lower end and 3.75 for the upper end. Now, many are calling this neutral. If you're dovish, you're calling this still somewhat restrictive. But most people are saying it's not tight enough to clearly choke growth, but high enough that hope for relief on mortgages, credit cards, and auto loans is not coming as fast as people want it to. The Iran-driven worries have lifted inflation expectations for the next few years, and we get the summary of economic projections at 2 p.m. today with these reports. And so really interesting day where we have inflation data at 8:30 for PPI producer prices. And then we got the Fed decision that's going to be taking into consideration the inflation we're seeing from oil premiums. Now remember, the Fed uses what's called the personal consumption expenditure index, core PCE, which excludes food and energy. Core PCE was hotter than expected, and hotter than headline PCE, which can signal that services prices are climbing even as energy has been falling earlier in the year. Energy's up now, but earlier in the year when these reports, in the window of these reports, energy had kind of fallen down a little bit. So we'll see if we get spikes now to headline. And we'll see if WAR steps in general here. Yeah, I'm looking at gold here. I believe gold's under 5,000. Yeah, gold is under 5,000 here. Look at gold's volatility this morning. So gold has been breaking down. Until March finishes, isn't oil CPI impact speculation? I mean, not really. I mean, technically it's speculation, sure. But everybody kind of understands that, yes, like, just to go into this, wait, where's that quote? Did I lose it? Maybe. Okay. It's kind of a long quote. But yeah, let me expand this a little bit so we can actually see the quote. There we go. Until March finishes, isn't oil CPI impact speculation? The Iran situation could end tomorrow. Perceived stability could drive oil to $35. Data dependence. I mean, could is a very broad word. Probability, I think, is more important here. And I think even if the conflict ends tomorrow, we're still going to have high energy prices. Oil's not going to drop to $35 a barrel. Prior to this conflict, it was what, 55, 60? Even if the conflict ends tomorrow, which I doubt it's going to, but even if it did, and I don't know what that would look like either, but even if it did, we're still going to have continued impacts to oil and inflation for the meaningful future, for the meaningful outlook in the future. Just because it takes time to get things back. Even if the war ended today, it's still not going to drive gas prices, oil prices down that fast. It will probably drop them somewhat, but it's not going to $35 a barrel. And so the big question is whether this conflict, I don't think we're ending tomorrow, but who knows? But gold getting hit. Dollar index here, if we take a look at it, here's the dollar index at 99.50s. A little bit lower over the last 2 days, but still elevated here. PPI will be shockingly higher today. Silver's dead. I don't think so. Silver's just had some crazy moves earlier prior to this conflict, so it's just stabilizing, I would say. I don't think it's necessarily helpful for silver to run up and hold over 120 like it did. I don't think that's really helping anything, but Bitcoin will dump back down to a better price today. Yeah, Bitcoin's still sitting right around where it was yesterday, but Bitcoin is starting to fall if we take a look at Bitcoin here. So Bitcoin, just to drag this chart over, is starting to dip. Look at Bitcoin. The Bitcoin, when I first looked at it this morning, was at 74s. It's now at just about 73,000. So Bitcoin is struggling here. And U.S. Trade Representative Greer is still speaking. He said Canada behind in talks compared to Mexico. According to Forbes, AI could automate 93% of U.S. job tasks. The new study finds AI could handle parts of 93% of jobs, potentially shifting $4.5 trillion in labor. Researchers analyzed 18,000 plus tasks, around 1,000 jobs with software development, finance, management, legal, office roles mostly affected. Cognizant CTO notes adoption is uneven, but rapid AI breakthroughs like multimodal and agentic AI are accelerating automation. Some physical and care jobs like construction and healthcare see smaller but growing AI impacts as technology evolves. Impact doesn't mean job loss. AI augments human work, improving efficiency and so forth. But regardless, Forbes and more think AI is going to take some jobs, 93% specifically in a lot of places. Trades will be less affected short term, maybe still affected long term. But that study just released here. And let's take a look at here's the Dow. Dow at about 47.5s. But yeah, still negatively reacting after these strikes were announced. Yeah, so Iran's giant South Pars gas field, which is the world's largest, shared with Qatar, is a key source of pipeline gas to Turkey. Disruptions to these flows could force Ankara to seek more spot liquefied natural gas (LNG) on already tight global markets, and so it's impacting the outlook for all this stuff. Yeah, y'all hit the live button next to the play button. Some of you guys are still telling me where you're from. Y'all are a little bit late here, but I appreciate it. But you're just a little bit late here, guys. And yeah, does the market close red or green today? We did a poll this morning. 74% think PPI shows up higher than expected. Only 26% out of hundreds of votes think that we're going to come in lower than expected. So only 26% think lower. 74% think higher here. Yeah, PPI inflation data drops. I'll get a timer up in the quarter. Yeah, we'll put a timer up here. Yeah, so we have about... how much time we got? It's 48. So we have 41 minutes roughly. Yeah, we got less than that. We got about 40 minutes left. All right, so the timer is now live. Timer's now live. I'm going to make it small, but we'll put it up regardless nonetheless right here on the right. Yeah, and what sectors do you guys think are going to be impacted the most from AI? Obviously, creative is what I see getting hit the most. Creatives is what I personally see getting hammered the most. I'll never buy gold again. This is some meme stock BS. I mean, gold's not really down that much here. Like, look, here's gold. Gold's down, sure, but it's not really meme stockish. Like, if you look at the long-term chart, it's not like gold has turned all the way back and gone down here yet. You know? All right, so I'm seeing Fars News report that some tanks and gas facility in the Asaluya refineries were hit. Greer is still speaking as well. He said, we will discuss rules of origin with Mexico, but that Canada is behind in talks compared to Mexico. And yeah, we have PPI inflation printing today. Last time it was elevated. And it was hot last time. It was up. And then we got the big FOMC decision later on today. Yeah, the FOMC decision is interesting just because Powell has this one and one more in April. But if Warsh is not confirmed in time as the FOMC chairman, Powell can legally stay on past May in what's called a holdover capacity until a successor is confirmed. Powell's 4-year chair term ends in May 15th specifically, but his underlying governor term does not expire until 2028. So he can remain on board and keep voting on the FOMC, and he hasn't really commented on whether he's going to stay on board. But under the Federal Reserve Act and standard practice, a Fed chair can continue serving after his term expires until a new chair is confirmed, which is what analysts are calling a holdover period. We also just got news regarding stocks that Johnson & Johnson announced FDA approval. Ushers in new era for its first-line systemic treatment of plaque psoriasis with targeted oral peptide. Yeah, but here's gold, guys. Under 5,000. been really volatile over the last hour or so. Here's the S&P. S&P's at about 6,800s here. Let's take a look at Nvidia. Nvidia is at 183.40s. So Nvidia basically flat still from its GTC conference. Apple up to 250s. AMD sitting at under 200s. Meta down to 623s this morning. Lululemon did disappoint in earnings. It's gapping down. It's at 150s for Lululemon. So Lululemon is down. They beat Q4 earnings, but guidance I think disappointed here. First quarter full year guidance. Levi Strauss, CEO, joined the board. Yeah, the company's first quarter and full year guidance outlook disappointing Wall Street for Lululemon. And so it's down. You can see it at 157. Does anybody think it's a buy here? I don't know. I've never been a big fan of Lululemon stock, as you guys know. And honestly, I was right. Because this thing has dropped on a yearly perspective from 350 down to 150s. And again, it's really easy to see why. Because trends change. Fashion specifically changes. I don't want to invest in this long term. Fashion could change and render them less popular, and you know. We also had Greer this morning say that U.S.-Chinese talks were constructive, apparently. But Nvidia also came out saying, let's take a look at Nvidia here. So here's Nvidia chart. Nvidia's kind of flat over the last, or really flat, really, since September, August. But yeah, they're apparently, they say they're now getting orders from China. And they said they could. Let me read this. A Reuters story quoting sources familiar with the matter said the world's largest company by market cap has now been authorized to sell H200 chips to the Chinese market. PayPal is expanding their stablecoin to 70 markets here. So here's PayPal. We are in PayPal. We bought this dip like a month or two ago. And it looks like it was a good dip. We're back up to 46s. Went all the way up to almost 47s yesterday in PayPal. What about Nike? I'm in Nike already. I'm not going to say whether I think it's a buy or not. I've been holding it. My average price in Nike is 57s. And so we're a little red in Nike, to be honest. But Nike, I think, is a little bit different than Lululemon just because Nike is much longer term. Like Lululemon might have been around a long time, but they really only gained like big prominence during 2020 lockdowns. Everybody stuck at home. So leisure wear, the fashion at the time was leisure wear, like the yoga pants and all this different stuff. But again, trends change. And one of the dynamics here is that, oh my gosh, dude. One of the things is that generations, each consecutive generation generally doesn't want to wear what the previous generation wore, except for maybe Gen Z. Gen Z likes to say that, millennials copy them, but really Gen Z wears exactly what we wore in the 90s. You know, this is just objectively true. We wore baggy pants, oversized shirts, you know. They have we wore I remember the metal beads. I don't know if y'all remember that. They were all kind of basically bowl cuts, mullets, everything from the 90s they're doing. But generally Nike has been really resilient as a fashion company. It's one of the fashion companies I don't mind it as much. You know, why? Because it's been more resilient. And there's a lot of markets that rely on Nike and shoes, so it's just been more resilient. But it doesn't mean it's safe. It doesn't mean it can't correct back down. Here's Nike. It doesn't mean it can't fail. The shoe market, I think, has lost some interest as well. Again, I'm not super familiar with sneaker markets, but it seems like they've lost some hype too. Yeah, everything's cyclical, 100%. Yeah. Watching HIMS at the moment. Any other stocks you guys are interested in looking at? If you mention penny stocks, I might just skip it though. I don't really want to look at penny stocks, guys. But Micron earnings were actually Micron earnings are this evening, if I remember right. So Micron earnings are not this morning; they are this evening for Micron earnings. Micron, yeah, this morning we had Macy's, GIS, Jabil, and more. MU earnings are this evening, 4 p.m. Eastern Standard Time. They're expecting $8.81 a share on $19.15 billion in revenue for MU. So yeah, Micron, remember, this could be a big catalyst for AI. Micron does report earnings after the closing bell today. So Micron does report earnings after the closing bell. You guys be ready. We'll see what happens, but yeah. Yeah, I generally like Alphabet stock as well. I see somebody mentioning Google. I believe I'm in this. I'll have to go look, but Alphabet stock, I generally like it a lot. It's up a ton on the year. You know, you look at a weekly chart, Alphabet stock obviously is just doing great. Pull it back a little bit with most tech companies right now, but again, I'm not an investment professional, guys. I'm not liable if you lose money, but I generally like Alphabet stock long term. You know, I really like Amazon. I think Amazon's business model is going to be really resilient compared to a lot of other things. It's not perfect, but I think there's resilience in Amazon. I see some people mentioning SoFi. I'm in SoFi, but I'm actually red on this. So I'm in SoFi, but I'm red. I'll probably just stay in it. It's not a huge investment, but they've lost some hype for sure over the last 6 months, year. You know, you can see they're down almost 50% since November here for SoFi. So is it a dip buy? Maybe, but I think there's also risks because, you know, it's kind of a newer company. Just to put this into perspective, SoFi stands for social finance. And so they do like loans and stuff like that. And there might be some saturation in those markets as well. But I generally like SoFi. It's not without risk. So I am seeing breaking news as well that the United Arab Emirates is mulling joining U.S. efforts to secure the Strait of Hormuz, according to the senior advisor to the UAE president. I'm seeing that news release here. And 30 minutes left until PPI inflation, guys. We also see sirens were sounded in Bahrain, according to the Interior Minister. But yeah, some tanks and gas facilities in the Asalula refinery were hit, according to Fars News. And we will see what PPI inflation shows today. Tesla is interesting. I think Tesla, is, they're taking a gamble. They're putting all their money on, not all their money, but they're transitioning from cars to AI and infrastructure and robotics. And so, it's definitely a riskier thing. They still should be okay, I think. Grok and robotics and all that stuff. They've been building that stuff, so I think they still should be okay. But it's bigger risk, bigger reward for Tesla. At the same time, maybe it'll help their margins. Like, one of the biggest criticisms for Tesla specifically is that their EPS is kind of low for how valued their company is. Their last EPS was 50 cents a share. Now there are a bunch of shares, but still, $400 a share. We'll see if it rebounds. Tesla is down. What is this? About 20% since December. So we'll see if it's time to buy Tesla. I don't know about this one. I like Tesla, and I think it'll probably go up, but it's not risk-free either. So CPI swaps price currently U.S. headline inflation around 3.2% in March and near 3.5% inflation by June, which does reflect the impact of gas prices. So again, they're projecting. I'll put this up in chat right now. But they are projecting. Hey, look at this. They are projecting that headline inflation hits 3.2% in March, which includes energy. You know, core excludes food and energy. Headline includes it. But by June, they think we're going to hit 3.5%. And be ready, guys. PPI inflation, 8:30 Eastern Standard Time today. The president's also speaking again. He said, remember, for all those absolute fools out there. He's critical of Iran, saying they're number one state sponsor of terror. We are putting them out of business, he says. He posts that the U.S. is rapidly putting them out of business. U.S. President Donald Trump recently just said. And yeah, remember, we have the FOMC decision at 2 p.m. We have the dot plot update, summary of economic projections, and more going live 2 p.m. Eastern Standard Time today. A raise may come before the year end, although I think first quarter higher than 0.3%. I see 0.5%. And remember, guys, we covered this earlier. Hold on, I'm sorry, guys. We covered this earlier. PPI last time was elevated. Month-over-month headline PPI, or no, was it core? Let me see. I think it was actually core. I think month-over-month core PPI showed up at 0.8%. Am I remembering that right? 0.8% month-over-month headline. Again, follow me on x.com at beginner trades, guys. X.com at beginner trades. But yeah, the last PPI data we got for January showed core, which excludes food and energy, at 0.8% versus 0.3% expected and 0.6% previously. So excluding food and energy, we saw inflation spike up a little bit for core PPI in January. And this is heading into, you know, oil spikes being included in inflation data, and so we'll see if that gets worse. I think you got to be a little bit nervous here, no? I think you got to be a little bit nervous. Yeah, if you want to follow me on x.com at beginner trades, there's the link. We post all this stuff live as well when it comes out. So give me a follow there. We appreciate it at beginner trades. 25 minutes here, guys, until PPI inflation. We have about 1,000 people here already. Early this morning. It's only 7 a.m. here in Texas. So I appreciate you guys spending your morning with me. But PPI inflation, a big print today. We will see what we get. Yeah, today's PPI print is going to be scrutinized for confirmation or a potential contradiction of the recent inflation path ahead of the Fed statement. 8:30 Eastern Standard Time. We also have factory orders at 10 a.m. today. But yeah, it's a big, busy week. Have you made a PPI prediction? Yeah, no, I have not. We will a little bit later. We got about 25 minutes left. So yeah, just give me a little bit. But yeah, Fed meeting today. A lot of stuff going on. Yeah, you can see the odds for Powell staying on as chair. First of all, let's take a look at what the path is looking like for rates here. So here's the odds currently for today. We're at about 1% likely of a cut, and I just don't think that's obviously going to happen. I obviously don't think that's going to happen. I mean, but yeah, so I am reading via Axios that a senior Israeli official says the Israeli Air Force struck the largest natural gas processing facility in Iran, located in the southwest. It was carried out in coordination with the approval of the United States. But yeah, so that news is releasing here. Yeah, so basically a source familiar with the details said facilities related to gas infrastructure only were attacked in Iran. The targets were facilities adjacent to the South Pars gas field, the world's largest natural gas field. And there's joint activity there by Iranians and the Qataris. So let's look at oil real quick here, guys. Oil still elevated. Was over 95 after this news was announced. Kind of stabilized back down, but still elevated nonetheless. You can see Brent crude still up. Kind of volatile in the day, but here's Brent crude. Yeah, so does today's PPI inflation print show higher or lower than expected? 74% think higher out of almost 500 votes. 26% say lower. Here's Brent crude prices. So we do have Brent crude right here. 104s. Bitcoin is likely going back to 66,000. Yeah, remember PPI inflation data 8:30 Eastern Standard Time today, 8:30. Wait. I remember this song. They're going to start rapping. No? Okay, no, maybe not. Yeah, NASDAQ is over 25,000 if I remember correctly. But it's pushing back towards 25,000 as we speak. This strike news is making, again, what we're essentially seeing happen here is that, you know, some people are like, hey, the war could end tomorrow, and that's true. But the more that we get these strikes, the less likely that is. And so what we're seeing here is we're seeing oil spike because of supply worries. You know, the more conflicts overseas, the more oil tends to go up, if you're trying to understand what I'm talking about here. Here's oil. Oil's gone from $91 at the start of the day today all the way up to 94.50s for WTI. Brent has gone from, what do we start the day at? Yeah, Brent was all the way down at 101s. It's now at 104s after these strikes were announced. And this is heading into PPI inflation in about 21 minutes here, guys. So we do have PPI inflation in about 21 minutes. So higher, good, John? Higher in what? Yeah, I'm seeing some people say, is Jerome still scheduled for an April meet? Yes. I heard that this may be his last before he steps down. Honestly, there's been rumors that he was going to get fired and all this stuff for a year plus now, to be honest. None of that has ended up being true. The subpoena was also dropped. You know, like the Department of Justice went after Powell for a subpoena regarding Fed building quotes and timelines and you know, how much it costs. And so the Department of Justice went after Powell. But a judge recently, you know, rejected that subpoena. And so unless they win the appeal, which is not looking very probable, the lawsuit, or, you know, the subpoena is basically done. The charges are basically, you know, they fell through. And so what that means is that we're probably going to see Powell. Powell did skip the semi-annual monetary policy report to Congress. So Powell did skip that. Usually he does it in February or March. We haven't even gotten that scheduled. So it's not looking like he's going to do the first half, maybe the second half. But because of that, all eyes are going to be on Powell today to see if he says anything regarding all this stuff. But yeah, PPI inflation, chat, in 19 minutes. 19 minutes. Here's the NASDAQ. NASDAQ over 25,000. I am watching 25K though. 25K is very close to us here. So I'm definitely watching 25,000. And again, January PPI ran hot, about 0.5% month over month, roughly 2.9 to 3% year over year, beating estimates and scaring markets about higher for longer risks, with the included fears of oil prices spiking after these readings. The consensus today, 0.3%, if you look at the bottom of the screen, 0.3%. So the big question, really, with this PPI inflation is, do we cool back towards the trend, or do we print another hot PPI, you know, release today? That confirms an upside shift in momentum and inflation. Core PPI, which excludes food and energy, did surprise sharply to the upside in January. 0.8% core PPI month over month, over 3% year over year. And so markets are going to be looking at whether core moderates towards that 0.3% expectation, or does it stay elevated like it was last month, especially in services and trade margins, which would reinforce the sticky core inflation narrative. So remember, PPI is upstream inflation here, though. So continued 0.4, 0.5% plus prints raise the odds that firms pass costs through into consumers and CPI and stuff like that. So the Fed looks at core PCE inflation, which is already running hotter than core CPI. And so a lower than expected PPI print would support the case that January was just noise, and does give doves a little bit better arguments. Another high print would kind of confirm the Fed's cautious approach. I don't think we're raising rates this year, but a hotter print could, validate the Fed's cautious stance that they've been having. And so if PPI is hotter than like 0.4%, we'll probably get higher yields, a stronger dollar, pressure on long duration and growth. If it's cool or in line, maybe we'll get a relief rally for equities continuing with all the downward pressure we've seen over the last few weeks. And we've had a couple green days here in markets, though. Here's the Nasdaq. You can see yesterday was green. Today is green. Although we are starting to give it back with news of these strikes. Look at the Nasdaq tumble here, down to 25.38 after these strikes was announced. And so markets are still really pricing in these strikes. Wall Street Journal also just reported that Americans are leaving the U.S. in record numbers. So yeah, Israel is striking energy targets with U.S. support. A senior official says they struck major natural gas processing facility in southwest Iran, targeting energy in coordination with and approved by the U.S. military. So Axios reported it as well. They said Israeli Air Force has struck gas processing facility in southwest Iran. So yeah, that news is tanking markets right now. You can see oil pushing to 95 plus a barrel for WTI crude, and the Nasdaq tumbling down here. Also, the president just tweeted regarding Powell. The president just tweeted regarding Powell. He reiterates the criticism against the Fed Chair Powell. He said, "When is too late, Powell lowering interest rates," end quote, U.S. President Trump. I kind of cite all the news sources. It's not like you guys get mad at me for picking sides. Like if I report something that people don't like hearing, y'all think I agree or disagree with it. Listen, I'm very neutral on all this stuff. I'm just reading the news here, Basically, what I'm saying is cry about it, is what I'm saying. Cheers to you guys. It's all love here. I'm just joking, kind of. But the president just tweeted, he reiterates criticism regarding Fed Chair Powell. When is too late, Powell lowering interest rates, end quote, U.S. President Trump. Here's a good question for the chat. Should we cut interest rates soon, or should we not? Put yes or no if you think we should cut interest rates. If you don't think we should cut interest rates, put no in the chat. If you do, put yes. Should we be cutting interest rates right now? Let me know. I'm curious. I'm not picking sides. All right, so looking at the chat here, a lot of quotes. I see it. Yes. Yes. We should not cut interest rates. Yes. No. No. Yes. No. Big no. Yes. Wait for a recession and then cut. No, yes, no, yes, yes. Yeah, I mean, prior to the oil stuff we're seeing right now, I probably would have said, yeah, we could cut interest rates. With the Iran conflict, I think it gets a little bit trickier to cut interest rates right now. Why? Because gas inflation, oil inflation, energy inflation, basically, that we're going to be seeing here with elevated energy prices. And, so I think if the Iran conflict didn't happen, we could probably be cutting right now. Just because of the weakness that we've seen in labor. But I don't necessarily think it's an easy thing. At the same time, on the other end of that, I'm kind of one of those people that think that rate cuts are not going to be the worst towards inflation. They're definitely not good. They can contribute to inflation, but printing is much worse. And so I'm one of those people that if we cut rates right now, I probably wouldn't be mad about it. but I think there's risks obviously as well, right? So I'm kind of somewhere in the middle. I lean towards pausing and waiting for at least a couple, look, at least a month or two. We'll see what inflation looks like next month for March. But I also understand with the weakness that we've seen in labor, we don't want to enter a recession. And then we're going to have to super print to get out of it. And I don't want to super print, or I don't want to super ease. And so I'm kind of in the middle. I really am. And I think really that's what a lot of people's stance is. And that's probably why we're pausing. And that's why the Fed's going to pause this month, next month. I don't think we're going to get rate hikes, but we'll see. All right. 13 minutes left, guys. 13 minutes left until PPI inflation data drops. 13 minutes. We'll see what we get. Cutting interest rates during oil shocks would surely lead to a disastrous result. Yeah, I mean, I understand it. These prices are way too high. We should cut it. Cutting interest rates would not be beneficial towards prices, sir. Cutting interest rates would stimulate the economy more and potentially make prices higher from increased spending and stuff like that. So cutting rates is not really, you're thinking the opposite. If you want to get prices down, you go restrictive. And so it's, again, Iran is going to take several phases of the South Par gas field offline, according to Fars News. So Iran is going to take several phases of the South Pars gas field offline, according to Fars News. PPI inflation data today, guys. Be ready. We have 11 minutes left. 11 minutes. Ten minutes left here, chat. All right, so I'm seeing some reports that say both sides are now targeting upstream production in oil and natural gas assets. But Iran takes several phases of the South Pars gas field offline. Oil up to 95.5s for WTI crude. NASDAQ is just at 25,000 here, so we are almost at 25K right now. Almost at 25,000. Yeah, gold's dumping down for sure. So gold is dipping. But remember, we got PPI inflation data going live at 8:30 Eastern Standard Time today, guys. 8:30 Eastern Standard Time today. Let's see what this inflation print looks like. Here's 25,000. Do we find support here? NASDAQ at 25K. The Dow. 47,314s. 47,314. So the Dow is now technically red on the day. Let me see where the NASDAQ closed yesterday. Yeah, the NASDAQ and the Dow are both technically red on the day now after there were strikes. More strikes were announced. So strikes of the largest natural gas processing facility in Iran, located southwest in the country. South Pars gas field hit. The Ayula was striked as well. South Pars offline now. And here we go, guys. PPI inflation data going live. We got about 8 minutes left. About 8.5 minutes left, really. Hit the live button next to the play button. Make sure you're caught up to the stream here. Put it in 2x speed. Catch up. About 8.5 minutes left. This is from February. It's expected at 0.3% today, but last PPI was elevated. Specifically core PPI, which excludes energy prices. The core excludes food and energy prices, which are seen as the most volatile fluctuations in these, right? They go up and down by bigger margins, more variance. But core PPI, core producer prices, core business prices were inflated versus expectations, as well as versus previously in the last meeting, or in the last report that we got at the end of February for January. Today we're getting February's print, and we'll see if those rises continue in core inflation. Because if they do continue, again, hot PPI means higher yields, stronger dollar, pressures on growth. So again, sustained 0.5, 0.4% month over month prints raise the odds that firms are going to pass these costs on to consumers, and we'll see it in CPI and core PCE, which is already running hotter than core CPI. The Fed looks at what's called the core personal consumption expenditure index, which is PCE inflation, and it's already running hotter than CPI is. And again, we got this data released in 7 minutes. What do you guys think PPI inflation shows up as? I don't know what again, let me make a guess here. Oof. What's headline expected at 0.3%? So yeah, so here is what's expected today. Headlines expected at 0.3%. So is core. You know, I would go with as expected. I'm going to go with I'm going to go with 0.2%. Lower than expected. Hey, just a guess. Do not hold me to this. Like, I might be wildly wrong about it. I'm not really that good at PPI inflation. Although I did get the last one right. But I'm going to go with 0.3%. Or no, 0.2% or 0.3%. Slightly lower to as expected is my guess. Let me know what you guys think. What do you guys think for inflation data? What do you guys think? I see Chef say 0.5%. 0.5% higher. And again, our poll is showing 72% think higher than expected. 72%. So yeah, our poll is showing higher than expected today. Almost 3/4 of you guys think we're going to get higher inflation print. All right, so I'm looking at some of these numbers that you guys are mentioning in the chat. Some people are saying 0.8%. Some people are saying 0.35. Some are saying 0.4%. I didn't say 0.2%. I love you. Have a good day. I didn't say 0.2%. I said I did say 0.2%. You're right. I'm wrong. Again, the 2-year yield is up. One of the things that this inflation report, look at oil on the day, guys. Let's take a look at oil real quick. Oil almost green on the day at 96. Hey, dude. Love you, bro. Yeah. Have a good day, dude. You all right? Yeah. All right. Yeah, so look at oil, guys. Oil is almost green on the day. We're at 95.7s here, 95.7s. We'll see if these spikes continue. But 95.7s right now for oil. We have less than 5 minutes left here. Less than 5 minutes left. Gold is dumping down. And here we go, guys. It's the big, let me put some better music up here. Here we go. You guys ready? Let me make sure there's no vocals here in this music. All right, guys, here we go. 4 minutes. 4 minutes left. Again, crude oil and gas futures are up on session highs after Iran's upstream oil and gas facilities are hit for the first time. Iran is going to take offline several phases of the South Pars gas field, which is the world's largest natty gas field. And you can look at natural gas this morning here, spiking up over $3. And this is heading into PPI inflation's print in about 3.5 minutes, guys. About 3.5 minutes, we have PPI inflation going live. Most people in my chat think we're going to get higher than expected prints here today. Last time we got higher than expected and higher than previous prints, and we're expecting 0.3% for February. Now remember, this PPI print does exclude the oil gains we see in March. This is for February, and yeah, it's time. And this is ahead of the FOMC decision going later on today here, guys. So this is ahead of the FOMC decision. We have the FOMC decision going live at 2 p.m. Eastern Standard Time with the dot plot update and inflation data today. This is wholesale producer inflation. Remember, the January print ran high at about 0.5% for headline, roughly 2.9, but 3% on the year for January for PPI wholesale business inflation is what this is. The consensus for today is 0.3%. And yeah, this should be really interesting. Really interesting. We have 3 minutes left. 3 minutes. Last time was 0.5% headline. We're expecting 0.3% today. Core was core really 3.7% on the year last time? Or no, core is expected today. It should have been 3.6%. Although that's the smallest reading. 0.3% on the month is expected for both core and headline today. But man, less than 2 minutes here, guys. Less than 2 minutes. Y'all be careful. This could move markets. It depends on how high the print is. So it could move markets. Oil is elevated on the day. And here we go. We're less than 2 minutes into the day. We got about 1.5 minutes left. Make sure you hit the live button next to the play button. Make sure you put it in 2x speed here today, guys. We are going to put it in sub-only mode. Here we go. We got 1.5 minutes left. A little bit less than that, actually. About 1.5 minutes left. And here we go. PPI inflation live in about 1 minute here, guys. Remember, make sure you're real time on the stream. All right, make sure you're real time. We have about 1 minute left. Hit the live button. If you put it in 2x speed, you won't be delayed. If you hit the live button, put it in 2x speed, you won't be delayed. 1 minute. Less than a minute, actually. We'll get a countdown going here, but here we go. PPI inflation expected at 0.3% month over month, 3.7% on the year for core. Headline expected at 0.3% on the month, 2.9% on the year. Last time it was elevated. We're going to detail this report live as well here. We have about 35 seconds left. 35 seconds left. And here we go. About 25 seconds. And this is ahead of the FOMC decision. 20 seconds, guys. 20 seconds. This timer's a little bit early that I have on my chart. So, yeah, this timer's a little bit early. But here we go. We have about 10 seconds left. And PPI is showing up. We got about 4 seconds, 3 seconds, 2 seconds, 1 second. And here's the PPI print. PPI showed up higher than expected. 0.5% on the month for core. 0.7% on the month for headline. 0.7% on the month for headline. 0.5% on the month for core. 3.9% on the year for core PPI. For February, came in at 3.4% on the year for headline. Higher than expected everywhere here, guys. Higher than expected everywhere. Core showed up month over month at 0.5%. They expected 0.3%. We'll put this up on screen. We're going to dig deeper into this report, though, guys. So we are going to dig deeper into this report. So stick around. PPI showed up hotter than expected here, guys. Hotter than expected. We can read this report now. Look at the NASDAQ dip here. Look at the NASDAQ on the right. Look at this dip. PPI showed up hotter than expected and increased 0.7% in February, seasonally adjusted. More than half of the February rise in prices can be attributed to a 0.5% advance in the index for final demand services. Prices for final demand goods increased 1.1%. So higher than expected here, guys. Look at the NASDAQ on the right here. The NASDAQ is dumping on this report. Higher than expected data here today, guys. So we showed up noticeably higher basically everywhere here for PPI inflation. Noticeably higher everywhere. Bitcoin is down on this report as well. But yeah, PPI showed up elevated here. Higher than expected. Look at this right here, guys. Core PPI. I'll put this up on screen. Services driven is what this is. So this is services driven inflation here. But look at this on screen. So again, services driven inflation at the wholesale level, soft goods and energy and core running hotter than headline. So final demand PPI rose 0.5% in January after 0.4% in December and 0.2% in November. It's up 2.9% on the year, but final demand core increased 0.3% on the month and 3.4% on the year. Final demand services went up 0.8% in the month, the biggest gain since July of 2025, driven mainly by a 2.5% surge in trade services margins. Final demand goods fell 0.3%, with energy down 2.7%, and this is ahead of March, where the energy prices really started to rise. So energy being down in February is not a shock, but in March, we're probably not going to see the same thing. Over 20% of the services increase came from a 14.4% jump in margins from professional and commercial equipment wholesaling. Other gains in apparel, retailing, chemical wholesaling, telecom access, health and beauty, optical, and retail. On the good side, gas dropped by about 5.5%, and there were noticeable decline in eggs, electric power, gas, fuels. Yeah, they did highlight that seasonal factors were recalculated using 2025 data, revising seasonal adjustments for 21 and 25 slightly. January sales release also notes the federal shutdown delayed survey logistics, but yeah. Inflation elevated. NASDAQ down. Definitely negatively reacted to this. Look at the NASDAQ dipping here on this report. So the NASDAQ is lower than expected here. Look at this drop. Remember, though, this is a services-driven inflation report. So remember, this is a services-driven inflation aspect, down to 25,950s here. And the big worry right now, guys, is that this is going to get passed on to consumers. This is higher inflation month over month for two prints in a row here. 2 prints in a row, 0.5%. Previous was 0.8%, but it still went up over 0.3% expected. So the final demand services jumped 0.8% month over month, and this was the main reason we're seeing such a high month over month print. The final demand goods actually fell 0.3%. So services are doing all the work and pushing headline inflation higher. Energy prices dropped ahead of March, but it's not about oil and food from the previous report, but more about what businesses are charging for services and margins is what this report shows. So again, the NASDAQ down, already red ahead of this report, but PPI just kind of exacerbated this problem here. Margins for professional and commercial equipment wholesaling surged 14.4% month over month, and there were additional margin increases in apparel, retailing, chemical wholesaling, telecom access, health and beauty, optical. But yeah, let's take a look at gold here. Gold dumping down 48.90s right now for gold. Oil's rising, gold is falling, NASDAQ is falling. Bitcoin, let's take a look at Bitcoin here. Bitcoin down to 72.4s right now for Bitcoin. Look at Bitcoin here, 72.4s. It's not looking pretty here for it. And yeah, another month of high PPI inflation. Now, with 2 consecutive months in a row with higher PPI inflation, the big story right now is going to be we might see higher prices next month, excluding energy. We might see higher headline inflation next month, excluding energy, just by the increases we're seeing in producer prices. Again, we might see higher prices, not even including the oil spikes that we see in March when we start to get inflation data next month. And so we can take a look at yields. One of the things, like the aspect of this, just to understand this, is that yields and interest rates follow each other. And so yields are probably spiking on this report without me even having to look at them. Yields and interest rate sentiment follows each other. Yeah, and look at yields right now. This morning, they were under 4.2%. If we look at this, they were under 4.2% this morning. Yields are now over 4.2%. They're at 4.206% for the 10-year Treasury yield. You can see it right here. So yields are spiking. Less odds for rate cuts. And the problem with regards to today's inflation, with today's inflation report and regarding the FOMC decision today, is that this is going to cause apprehension to cut interest rates. If you want rate cuts, this is going to push back those odds. Why? Because with inflation sticky, and this report does not include the oil premiums prices that we're now seeing since this conflict started in March. This is February's report. We're getting it in March, but it's February's report. It does not include the oil spikes that we've seen here. So what that means is that regardless of oil prices spiking up that we're going to see in April's inflation prints, producer prices are up as well, and that could get passed on to consumers. We've seen 2 consecutive months of high producer prices, And that could get passed on to CPI, could get passed on to the Fed's preferred inflation metrics, PCE inflation, and more. So, yeah, more hawkishness by the Fed. Does the market hold here, guys? Does the market hold? Let me know. Yeah, we got a dip in stocks here, but the question is, what does the Fed meeting do to all this stuff, right? So we got some dips in stocks. The real question I have, though, is that what does this do regarding rate cut outlook? How many rate cuts do you guys think? Let's ask the chat right now. And just since we have a lot of people here, how many rate cuts will we get this year moving forward? I know a lot of people are going to say one or none. How many rate cuts do we get this year? Let me know in chat right now. Just put the number that you think we're going to get in 2026 in chat right now. Let's see what the chat thinks regarding rate cuts. Yeah, I see somebody immediately saying 0, 2, 1, 0, 1, 3. I don't think that's happening. Maybe if we start to get really weak job numbers, but 2. I see 0 in chat. Most people are expecting 1 rate cut. -2. Does that mean 2 rate hikes? 1 or none. 1, 0, 2, 0, 1, 4, 3. I think you guys are just saying stuff. Do y'all really think we get 4 rate cuts this year? We didn't even get 4 rate cuts last year. We got 3. 0 rate cuts going up. Does the NASDAQ stay down here? We'll see. Again, Israel is targeting civilian infrastructure in Iran in a major escalation, according to Al Jazeera, citing an informed Israeli source. But yeah, PPI inflation. Heated. Again, wholesale inflation comes in hot with February producer prices rising 3.4%. This is the biggest jump in producer prices in a year plus. Yeah, Jim Cramer also saying PPI shouldn't be this much of a mover. Lots of extraneous factors. But again, 3.4% for PPI. 2.9% previously, and they expected 2.9%. Man. High. This is high. Yeah, 3.4% versus 2.9%. Just to recap the morning, guys, oil is up today. Gold is dumping down. Oil is elevated. WTI crude over $95 a barrel. The NASDAQ, S&P, Dow have corrected. And this was prior to the inflation report. But since producer prices showed up so hot, it kind of caused more problems on the downside for indexes today in equities. NASDAQ getting really close to 25,000. So we'll see if that level holds. The report's already out. We already covered the report. Again, PPI 3.9% on the year for core. Headline at 3.4%. Month over month core 0.5%. Headline month over month showed up at 0.7%. So much higher than expected basically everywhere. This is the second month in a row. Yeah, I'm really curious. Like, we can take a look at the Fed Watch tool and let's see if these odds for rates are going to be changing here. Because here's the Fed Watch tool right now. All right. So here's the Fed Watch. Fed may press other buttons besides a simple rate cut. Yeah, but I don't think they're going to do anything right now with stuff like this. I think they're just going to wait and see right now, especially this meeting. Obviously, we're still at 1%, but we can look at next few meetings. Here's April's meeting. Is this right for April? Yeah, look at the odds. So the odds for an April cut are now 99 to 1%. If this is correct. Somebody in chat right now, do you guys show this on your screen? April odds for a rate cut at 99% unlikely? Like 99% chance of another pause in April? June is showing 80+% chance of a pause. July is showing 65% chance of a pause. September is showing 53% chance of a pause. So now markets really are not pricing in a majority likelihood of a rate cut until October. So it's still 47% chance that even by October, we do not cut interest rates. So here's December. You know, there's a 35% chance we don't cut rates at all this year. Here's 25,000 on the NASDAQ, very relevant level. Yeah, 99% chance for no rate cut. Time for a rate hike. We keep getting a hot PPI inflation print like that. I might start agreeing with the rate hike push. We've had a couple people that are like, yeah, we're going to cut, or we're going to raise rates this year. And as of now, so far, I've disagreed with them. But listen, if we continue to get rate hikes, if the escalation continues in the Middle East, or if we continue to get high PPI prints and the escalation continues in the Middle East, I'm not even disagreeing with you guys at that point. Like, if we continue to see super high inflation, I might agree rate hikes might be coming. Depends on what next month. Remember, next month inflation reports are going to be bigger. Look at the NASDAQ dump again here. Let me check breaking news to make sure no more Middle East stuff dropped. Iran will hit enemy sites previously thought to be safe, according to FARS. So Iran's reporting that they're going to retaliate against the attack on energy infrastructure, according to FARS. This released about 20 seconds ago. This is what's driving NASDAQ down and oil up right now. But again, right now, Iran is going to retaliate against attack on energy infrastructure, according to FARS. So Iran's going to be hitting any enemy sites previously thought to be safe, according to FARS. You see NASDAQ down. Brent, WTI crude up to 96.20 a barrel here. And this is why people are worried about inflation for March. This is why people are worried about March inflation. Is because look at the oil premiums we're seeing. If we look at Brent crude, Brent crude is over 105 a barrel here. Look at Brent. It went over 106 for a little while. But look, here's Brent. Over 105. It's at 105.80s right now after that news release that we just dropped. But yeah. Again, we got news reporting that Iran is going to retaliate against the attacks on the energy infrastructure, according to FARS. It will hit enemy sites previously thought to be safe. Oil spiked up to 96.4s. NASDAQ still tumbling down under 25,000 here. Here's the Dow. We can put the Dow on the chart here as well. Here's the Dow. Dow's down to 47.15s here. 47.15s on the Dow. Here's the S&P. S&P is down to 67.45s. 67.45s. I look at a bunch of different sources regarding news. Just subscribe. We cover this stuff live as soon as data release. We cover PPI faster than everybody else, really, to be honest. Like, I did watch some other people one time, and they covered it like, it was like a minute late. It was like a minute late. That means they're just jumping on trends. But again, an Iranian military source tells FARS News that Iran will strike the enemy's infrastructure after it targeted the Asaluya gas field, according to Al Jazeera. Yeah, we do have Powell today, 2 p.m. Eastern Standard Time. Be ready. We do have Jerome Powell today, 2 p.m. Eastern Standard Time today. So we'll see what we get there. But again, now that we have PPI inflation data out right now, I do want to ask the chat a question. Should we cut interest rates right now? Should we cut interest rates? Is it time to cut interest rates right now, all things considered? Is it time to cut interest rates today, guys? What do you guys think? I appreciate the content. Thanks. No, mostly no's. Of course. Too late? No. September. We need to hike interest rates, not cut them. No. So most people are saying no. Some people are saying yes, though. And look at the NASDAQ continuing to fall. S&P continuing to fall. Gas prices, oil's continuing to spike. Brent crude up. Yields are higher after this PPI print. And we got the FOMC decision later on today. Look at yields, guys. Here's yields. Yields are spiking. Oil is spiking. Cutting rates is dangerous. To cut interest rates, at least have a steep decline in jobs. There's some weakness, but not even close to being problematic. I don't know. I showed this yesterday. Here's a 5-year chart in regards to non-farm payrolls. Just to show you guys, like, where, you know, this is why I'm somewhere in the middle right now. Because look, this is trading economics. This is the trend regarding jobs since 2021. That's the trend in jobs since 2021. So it's not like jobs are in a good spot now. Are they the worst they could ever be? No. But the trend in jobs is certainly not good over the last year. Certainly not good. And I think that it's really obvious. You know, I think people, you know, I think a lot of the time people are really political. Like if they're on the left, they want rate hikes. They fear inflation more. You know, they kind of support Jerome Powell. And if they're on the right, it's kind of the complete opposite. They want rate cuts. They dislike Powell. You know, and again, I'm on neither side here. I'm not against you. I'm really not. I'm on neither side here. I'm just covering news. But I think the jobs are weak. I think jobs are weak right now. And I think if this continues, the Fed's job has to be proactive. And like I said prior to this print, if we didn't have such big oil inflation risks, I would probably be on board with rate cuts right now because of the labor market weakness. But considering the conflict in Iran, I think it's too risky right now to cut interest rates. I just think it's too risky. Prior to the Iran conflict, you guys remember, I told you guys I thought we could argue easily a rate cut. But after the Iran conflict, with how much oil has been spiking, with not really any end in sight yet, I think there's risks. All right, S&P still breaking down here. Here's the NASDAQ. So S&P still flushing. Here's the NASDAQ. Top 3 fastest. Everybody's broke, has no money. Let's give them high interest rates so they can really not afford anything. Well, Michael Weston, you got it backwards again, dude. High interest rates would push prices down, not up. It might restrict jobs, you know, and maybe that's your argument, is that it could restrict jobs and then people can't afford things because they're out of work. Maybe that's your argument. But the reason the Federal Reserve raises interest rates is to combat overheating and inflation, you know. So yeah, you're right, Lee. I'm not disagreeing with you. You know, again, so Iran's IRGC is going to issue a warning to Gulf countries soon, according to Tasnim. And the NASDAQ continues its fall down, and oil spikes are still there as well. Yeah, home ownership's a different story for sure, Michael. Yeah, no, 100%. The real estate market is wildly different. So... All right, guys, remember, we are going to be trading live today. We might be buying up some stocks for investments. We might be day trading stocks. We might be day trading futures today. So be ready here, guys. Be ready. But yeah, more strike news overseas, driving oil prices higher today. Again, Iran's IRGC is going to issue a warning to Gulf countries soon, according to Tasnim. Also, we're getting news that the Israeli army is preparing to launch a wide-scale attack on infrastructure in Iran as well. So they're preparing to launch wide-scale attacks on infrastructure. So, more escalation in the conflict, driving oil prices higher, driving Brent crude prices higher. And this is after today's really hot inflation prints. Hot inflation prints scaring markets here. Nasdaq down. Do we close red or green on the day, guys? Yeah, gold is dumping down here, really. Gold has been falling down. It's well under 5,000. You know, here's 5,000 way up here. At 5,000 level, rejected it, and we have fallen all the way down to 48.70s. Gonna be an interesting day. Red, big red. Best case scenario is we pull out of Iran immediately. Yeah. I don't think that's happening, though. Just in the last month, with fuel prices spiking and my suppliers increasing pricing 7 to 12% across the board because of global events, my business is getting hit heavily. Big red. Red or green day today, guys. We're obviously red so far. Nasdaq is down. Hot PPI print. Can't pull out. We are trapped. Yeah. Imagine surprise rate hikes. Dark red. Flat green. Yeah, I asked people what we do today. I see dark red. I see green. We're going to close in red. Mountain Dew versus Big Red. Green. Bitcoin 59.6 XRP. Let's go. Trump never pulls out. Red. Rate hike would be wild. I can't imagine what that looks like. Yeah, I don't think we should raise rates either right now. I think we should just wait. Like, I think we should just be patient and wait at this point in time. Again, prior to the Iran conflict, as well as the last two high PPI prints, I could maybe say, hey, we could do a 25 basis point small cut. After the conflict, it's too iffy regarding inflation, unfortunately. So, again, Brent crude up to, is this right? It says $108 a barrel. Where's my Brent chart here? Here's yields. Fed watch tool. Look at Brent. It's not 108. I don't know who's reporting 108. I guess we did spike to almost 108. We're at 106.70s right now, though. Look at Brent rise. Guys, so Brent, global standard of oil. Look at these rises. Global standard of oil up. 106.70s right now. Yeah, we're not going to be raising today. There's not even a probability of that. There's not even an option for that in most outlook regarding today. So we're not raising today. That would make everything worse. I think it would shock markets, freak markets out. But yeah, we're not raising rates today. It's just not happening. Remember, we do have the FOMC decision at 2 p.m. Eastern Standard Time today, guys. Here's my question here. Are we in a stagflation environment? Stagflation environment, just for the chat to understand, is an economic state that can sometimes precede a recession in which we have high prices and weak jobs. Are we in a stagflation environment now? We're not cutting rates either today. No, remember, I'm going to tell you guys this. Anybody telling you we're cutting rates today has no idea what they're talking about. Genuinely no idea. We're just not doing it. We're not raising rates today either, you know. So I'm seeing most people saying, yes, we are in a stagflation environment. Definitely. Yes. Not yet. Not yet. Yes. Yes. Absolutely. Close to it. Yes. I don't know. I don't know if the labor market is weak enough. You could maybe argue some stagnant labor data, you know, when we look at it. But I don't know if we're there yet. I hope we aren't. Yields have stabilized a little bit, but Brent crude still up significantly. Starting to see some stabilization in price, though. Remember, we got the FOMC decision today, 8:30. We had PPI inflation. We have FOMC decision today, 2 p.m. We were realizing in 6 months we are here right now. I would say yes because of the actual data, not because of feelings. I think OpenAI's IPO is interesting, but I think we could also maybe go the other way with it. GDP growing at an annual rate of 0.7%. You guys are very close to a recession. Yeah, so the GDP last time, now it is what's called, okay, to understand the GDP reports, we did get a weak one. Was it last week that we got GDP? I think so. Look at the NASDAQ continuing to test lows here. We did get a weak GDP report last week, I think. The way GDP works is you get 3 reports quarterly. You get one every month. You get what's called the initial estimate, which has the most variance. You get the first revision, which is somewhere in the middle, and then you get the final estimate, which is the most accurate one. The first one we got was 1.4% for the initial estimate. We had the first revision, which is the middle one, last week. It showed up at 0.7%. And so if that trend continues in regards to GDP data, we're getting close to neutral for GDP. We're getting close to zero. And if it goes negative, remember, a recession, people are saying, oh, we're in a recession now. We can't technically be in a recession right now. Why? Because the last GDP data we got was positive. It was not negative. And so in order for us to even be heading towards a recession, the next GDP print, the final estimate number, would have to be negative, and then this quarter in March would have to end negative as well, right? And maybe some people are saying we're close to one. Maybe that happens. It's still low odds, but maybe that happens. We'll see. The trend is definitely not good in regards to GDP, although I do think it was impacted by the shutdown to a certain extent. Again, IRGC has issued evacuation warnings for several energy facilities across the Gulf, according to state media. We're still getting news like this. Again, so Iran is now saying that some Gulf energy sites now legitimate targets. They published a list of facilities in Saudi, the United Arab Emirates, and Qatar. Inflation about to go burr. All right, guys. Hey, it is time. It is now 9 a.m. We have 30 minutes until the market opens. We have a few hours into the FOMC decision. Let's see what we get today, guys. We are going to be trading live at the opening bell, so stick around. We might invest in some stocks. We might trade some stocks. We might trade some futures here. I'm also seeing that the Chinese military is now going to hold talks with the European Union and NATO in Brussels, according to SCMP. So yeah, Chinese military set for European Union and NATO talks as the Iran war influences global security. UK's Chancellor Reeves says it's frustrating that there doesn't seem to be a plan for the Hormuz Strait closure. Yeah, but Iran's Revolutionary Guard issued evacuation warnings for several energy facilities across the Gulf. IEA's Grassi says they cannot inspect Iran while hostilities are ongoing. But Brent crude is up. Yeah, the FOMC meeting is at 2:30, but the big story of today, guys, regarding this FOMC decision, just talk about this a little bit here. So the big story of today regarding this FOMC decision is going to be the dot plot. There's two main points of today's FOMC decision. There's two main points. One of them, yeah, we're going to be streaming Powell. Yeah, we're going to be streaming the full thing live, 2 p.m. But There's a couple big stories. The Fed came into this year already pretty cautious. But now that we have the conflict in the Middle East, there's a heightening sense of caution. Could keep inflation sticky. But today we're going to get what's called the Summary of Economic Projections by the FOMC. So at 2 p.m. we're going to get what's called the Summary of Economic Projections by the FOMC. This should give us some outlook in what we might see this year. But I think considering everything going on right now, considering the war in the Middle East, considering gas prices, oil prices surging, considering PPI inflation sticky with core PPI, which excludes energy prices, I think the easiest bet would be that Powell's going to be hawkish. He's going to do a hawkish pause today. What I mean by that is he's going to pause interest rates, which is widely expected, but that his tone is going to be more restrictive, more hawkish because of the inflation risks that we're seeing. On the other end of that, though, we did have a negative 92,000 jobs report this past jobs report. So the last jobs report that we got was weak. Almost negative 100,000 jobs. Current policy rate for the federal funds is at 3.5 to 3.75%. And it's being described as relatively neutral. Relatively neutral. So, yeah. We do see yields higher here, though. Yields are up. The Fed's preferred inflation gauge, though, is PCE. And if we continue to see these high PPI prices in wholesale business and prices, they could translate to higher consumer prices. And we see it reflected in PCE inflation potentially. So there's risks for sure. But yeah, NASDAQ down big after more strikes. Oil up big. Hit 97.5s about 3 minutes ago. NASDAQ down, S&P down, Dow is down as well. Silver, gold falling. All right, guys, heading into the opening bell. We have 25 minutes left, 25 minutes left. Stick around. We do have the FOMC decision live today as well. So we do have an FOMC decision live today, 2 p.m. Spot silver down almost 4% right here for silver. Look at silver dump here. Silver already red, gold really red on the day. But the opening orders right around 9 a.m. for silver just causing dramatic drops for silver. Look at these falling prices for silver. So Qatar's foreign ministry spokesperson says that targeting energy infrastructure constitutes a threat to global energy security, to the people of the region, and to its environment. So let's see if this continues here today. Also, guys, you want to help support the channel, check out Apex funded accounts, check out Lucid funded accounts. Apex, I think their sale ends tomorrow. Most day traders are going to lose money. I don't even claim to be a good day trader. This is the only sponsor or affiliate that we post mostly, this and maybe one other one. And so again, I try to give everybody free stuff. Shameless plug here, shameless plug. But check out Apex. Great way to learn. Most day traders lose money. So if you want to day trade, don't fund your own account thousands of dollars. Most day traders lose their first couple accounts. Instead, they have something called funded account programs. Apex is super cheap. The base one is $17. You pass that test, you get $25K in funding right now with a 90% split. So if you fail, you lose 17 something. It's like $17 and something cents. If you pass it, 25K in funding, 90% split. Great way to learn because you're still risking something, but you're not risking the full extent of, 5, 10, 20, 30 grand like I did when I first got started day trading. This is in the futures market. So remember, this is in futures, but most day traders are going to lose money. And so in the futures market, you can day trade the S&P, the NASDAQ that we're looking at on the chart is futures. You can trade silver, you can trade gold, no PDT rule. Great way to learn. Again, they are an affiliate of mine. I am biased because I get paid by them, and I try to be honest with people about it. But if you want to check them out, I'll put the link up in the chat. Understand all this stuff on screen. Remember, I am not an investment professional. We are not liable if you lose money. Make your own assessment, trade smart. But if you want to check them out, nothing here is financial advice. The link is pinned at the top of the chat right now. But again, guys, listen. The Qatari foreign minister spokesperson said that targeting of facilities linked to the South Pars gas field is dangerous, an irresponsible step amid the current military escalation in the region. So this is what the Qatari minister just said. So here. Is Netflix not red? Yeah, man. So escalations in the Middle East here. With all this stuff going on, chat, when do you guys think this conflict ends? When do you guys think this conflict ends? Yeah, you can use my coupon code BT if you want to check out Lucid Apex BT coupon code. It'll get you the max discount. Right now, again, the base one on Apex is like 17 something. Check them out. Yeah, silver gold falling down drastically. Yeah, I mean, I personally like the end of day option. I sound like Aiden Ross? No, I don't. That's a crazy comment. Crazy comment. Yeah, so the end of day drawdown means like you have $1,000 trailing, you have $1,000 trailing drawdown. But if it's calculated at the end of the day, it means that the previous day, like if your account is, if the drawdown's $1,000 and you just start the account, you got 25K. That means the trailing drawdown would be 1,000. If it's intraday drawdown, that means that if you make $300, then it goes up. Then your trailing drawdown goes $300 intraday, right? So the end of day drawdown is better, if that makes sense. And they have two options right now on Apex. Apex has an option for an end of day drawdown, which is the better one for sure. It's a little bit more expensive, but it is the better one for sure. Yeah. Also, guys, check out our Discord. Completely free. Doesn't cost anything. And so check out our Discord. Here's the link right here. Check it out. I'll put the link up. Great way to reach out to us. If you want to reach out to us, join. There it is. Yeah, White House Press Secretary Leavitt says it's a good thing for the U.S. that Iran, one of their leaders is no longer here. And I'm still watching Brent crude. The market was doing so well this morning. Yeah, we did open green in the NASDAQ. We did open green. But again, more escalation in the conflict overseas. Nvidia is now technically red on the day as well. You can see Nvidia sitting at yeah, you can see Nvidia sitting much. Yeah, Sam saying decades more of conflict. You can see Nvidia on the left side here at 181. It's technically red on the day now. The NASDAQ is deeper red. I'm watching this 25,000 level, and we're going to watch for range breakouts and stuff like that. But remember, guys, today, remember, it is ahead of the FOMC meeting. And so what that means today is, number one, we could run big and trend really well and do all kind of stuff. We could. But we could also chop sideways as markets wait for the FOMC decision. And so we could easily chop sideways today as markets wait for the FOMC. So, again, we will see what we get today. But either one of those things, very possible. Very possible. And we'll see what happens. What do you guys think? Do we trend well today, or do we chop sideways until FOMC? No, we talked about the Truth Social post. The president hasn't really tweeted. The only thing the president tweeted regarding like Middle East is the president said U.S. allies need to get a grip, step up, and help open the Strait of Hormuz. But the president's finding trouble, they're having trouble finding allies that will help him reopen the strait. But yeah, we've been covering all the Truth Social posts, to be honest. But Nvidia just went back green on the day. Gold is still pretty low here. I don't think gold's going green on the day. Gold well under 5,000. And again, going back to psychological levels here, chat. Here's 5K. So why is the so here's 5,000. Here's the previous closing price today. We rejected at 5,000, and we basically just fell all the way back down. We're at 48.60s right now, 48.60s. So yeah, we also have MU earnings after the bell today as well. So we do have MU earnings potentially after the bell today. Is it time to buy gold? Maybe. Is it time to buy gold, guys? Let me know. Yes, it is. Big dump at the open. Yeah, let me end this. I've done this poll already. Does today's PPI print show higher or lower than 0.3% expected? No, it's not time to buy gold. Yes. So chat's kind of split on whether it's time to buy gold or not. Are you bullish or bearish for the opening bell? I'm gonna make neutral and sideways an option here. Bears in control right now. Definitely gold. I'd say anything under 5,000 is a dip buy in gold price. Yeah, maybe. Market has nothing to look forward to now. All right, guys, we got 15 minutes until the opening bell today. 15 minutes. Oil goes up. Yeah. I don't know if it's that easy, but kind of. I think MU earnings are really important as well. We'll see. Need a recession to reset all this stuff. Yeah, the only time prices literally go down is during a recession. So, yeah, we'll see. Yeah, the only time prices literally drop is during a recession. And they usually don't stay down even if we hit one, though. It's the problem. Like, generally, we're not going to see prices stay down for any significant period of time. It might slow down, but staying down and going down versus slowing down is a different thing. The other question here with today's FOMC decision, Warsh is supposed to step in May, but they're not going to confirm him as of now. They, senators and other Republicans say they will block all Fed nominees until a criminal investigation of Powell and the current Fed is dropped. So, we do have other news coming out today, specifically a lot of other interest rate decisions, I believe, this week. We got the Bank of Canada release in about 30 minutes at 9:45 in the morning, Eastern Standard Time. And we got the Bank of England rate decision tomorrow, ahead of the open. And we have more, I think, as well. So, all right, guys, look at gold still dumping down here. Oil still elevated, and the Nasdaq still dipping here. Look at WTI crude is up to $98 a barrel here. WTI crude is rising right now. Still rising ahead of the opening bell. Levitt is speaking right now. She said reopening Hormuz helps NATO countries more than the US. Again, Iran's Tasnim news agency lists Gulf energy sites as legitimate targets, warning they could be struck soon. The facilities named were Qatar, Saudi Arabia, and UAE Al Hazan gas field. They also said investigations are underway into leakers in the administration, according to sources. White House says Trump has full confidence in Gabbard, according to other sources. So IAEA's Grassi is urging the U.S. and Iran to return to negotiations. But man, look at oil still rising here, guys. Yeah, again, we'll see. We got the opening bell going live in about 12 minutes here, chat. We got the opening bell live in 12 minutes. I vote for big cuts today. You're just making stuff up at this point. Yeah, gold. Weak. Look at gold here, man. Gold giving back a lot of the gains it put in. It's at 4,800s now for gold, so gold is continuing to fall. Scary, scary. Yeah, also, guys, check out Lucid. Check out Lucid funded accounts here. Lucid has a direct to funded option. If you look at Lucid, opening bells in about 10 minutes here. If you check out Lucid, I love Lucid as a funded account program, though. You pass an eval and get funded in as little as 2 days, or you can go straight to funded. 90-10 profit split, no payout windows. Some of the easiest, most relaxed rules in the game as well, to be honest here. Again, if you use my coupon code at checkout, you can get the 25K one-time payment. It's just a one-time payment. Reasonable rules. $12.50 profit target on the 25K, $1,000 max loss limit. And it's an end of day drawdown, so it's a better drawdown. Another thing on Lucid though is that you can go direct to funded for $238. And so if you're impatient and you just want to get the funded account immediately, 25K is only $238, 50K is $364. If you use my coupon code BT, use coupon code BT. You can use it for Apex and you can use it for Lucid. Again, coupon code BT will get you the max discount there. You can get 50% off for new users as well with Lucid. So check them out. Man, let's see if gold holds. We are going to be day trading today in my funded account here. We got a couple wins really, but we are going to be day trading today. Let's see what we get. Looking at our poll, we did a poll. Bears are in control today. 60% basically saying. Yeah, there's the Lucid account in the chat right now if you want to help support the channel. Here it is right here. Check them out. But man, oil up, NASDAQ down, gold down. NASDAQ starting to rebound though. 25,000 is right here. So I am definitely watching 25K. 25,000 is right here. The 25,000, big psychological level. I think a lot of people are going to be paying attention to this 25,000 level here. We're going to look for opening range breakouts, but the 25,000 level I just think just makes sense. We're going to be watching the volume profile here using Trade Evade as well, but starting to fight our way back up. Look at 920s in the NASDAQ here. Again, and Levitt said reopening Hormuz helps NATO countries more than the US. We got the ECB decision tomorrow also. Yeah, look at oil here, guys. I got to switch over my oil contract, but man, I think I do. What's the new oil contract? Is it J6? Inflation is up and jobs are down. We just started a conflict. I don't see any positive near in future. Yeah, it's definitely kind of sketchy right now, to be honest. Again, crude is hitting $98 a barrel here. Gold is at 48.60s. Yeah, I think it's M6 actually. M6 looks like the most voluminous one. All right, guys, here we go. 7 minutes. 7 minutes until the opening bell. Let's see what we get today. Yeah, so White House press secretary says getting Iran's nuclear fuel is an option on the table. China agreed to postpone the Trump visit and will get dates as soon as possible. They are working on a date. The poll will be wrong again. Yeah, the Bears are in control on the poll this morning. The Bears are in control this morning. So let's see what we get today. But the Bears are definitely winning right now. On the poll, that is. The poll will be wrong again. Let's see if the NASDAQ holds, but I kind of want to buy this here, but it's a little early, so I'm just going to chill and wait, to be honest. I think I'm going to wait for the opening bell. I'll be Smokey the Bear. Yeah, I'm just going to watch this opening range. We do have a range here that I'm kind of paying attention to, but I'm going to look for opening range breakouts. Like, I'm looking at this range. I'm going to look for opening range breakouts as well, but I'm going to be noticeably more strict in regards to how we trade them. Just because ahead of the FOMC meeting, a lot of fears going on right now. We could go either way. We could chop sideways or we could really easily trend. But I kind of have to wait for it. And I have to wait for good positions here, so we will see. Let's see what we get. It's over 99%, I think, right now in odds of a rate cut. So I genuinely doubt we are going to see rate cuts today, obviously. Anybody that's telling you we are, if you watch any big time influencer and they are telling you we're going to cut rates today, they genuinely have no idea what you're talking about. You probably don't want to watch whoever that is, because we are not cutting interest rates today. And really, I think even Jerome Powell's tone, I think we're going to pause today and we're going to have a hawkish tone by Powell. We do get a summary of economic projections at 2 p.m. We'll see what those projections look like. I expect them to be a little bit of both in terms of fears regarding inflation and the labor market. But I do expect fears regarding inflation to be front and center in the summary of economic projections, just because of the conflict in Iran is influencing it. And so, yeah, that's my guess today. I think we're going to have a hawkish Powell, but a pause. And I think that we're going to have risks to both sides of the dual mandate, but more attention is going to be focused on inflation risks with restrictiveness and hawkish, sentiment today. Again, let me know what you guys think in the chat, but that's what I think today. is what we're gonna get. Might be wrong. Who knows? Yeah, oil, guys, still pumping up. Hit. It's definitely not M. What is it? I guess it's J for oil. Yeah, WTI crude at 97s, a barrel, 97s. Higher rate hikes than cut now. Do you think Powell will be hawkish or dovish today, guys? That's a good poll. We'll do one later, but hawkish or dovish Powell in the chat. Let me know. Put hawk or dove for Powell in terms of his tone today. I'm seeing hawk. All right, guys, here we go. I see another hawk. See another hawk. Hey, good luck. Last speech was all hawk. We'll see how seriously the market takes that comment. Hawk Tua, Super Hawk, Hawk, yeah. All right, guys, here we go. We got 2 minutes left, less than 2 minutes left. We'll see what we get. It's been an interesting day so far. About 1 minute, actually. We have about 1 minute left. Hit the live button next to the play button, put it in 2x speed. Hawk, question mark, 20% of the world's industry is disrupted. How is he supposed to feel? Hawkish means restrictive, means inflation fearing. And oil causes, the oil surge causes inflation. So that's why hawk makes sense. I don't see anybody really thinking Powell's going to be dovish today. I think maybe you could argue neutral, like neutrality based off of the labor market being what it was at negative 92,000. But I think a hawk tone makes more sense, obviously. So here's the opening bell, guys. We'll see what we get. Opening bell is right now. If this is delayed, hit the live button next to the play button, put it in 2x speed, chat. We'll see what we get. I'm extremely bullish. Be greedy when others are fearful. All right, guys, here we go. There's the opening bell. I'm seeing some strength in stocks right now, though. I see Alphabet pushing up. All right, so there's the opening bell. Nvidia's pushing up. It's at 183s. Or 182s for Nvidia. Nvidia's up. Alphabet is up at the opening bell. We're at almost 310s. Almost green on the day for Alphabet. MU is up since the opening bell. We have Meta, which is down slightly since the bell, I think. Amazon's up to 215 almost. Alphabet's pushing higher here. Let's watch Nvidia, though. Nvidia turning. At 181.90s here. 181.90s. Remember, John, I'm the one who predicted a rate hike this year. Yeah, honestly, you might be right. I don't know. I think before this conflict started, it was super low odds. But now that the conflict started, I think it becomes more probable for sure. Nvidia down to 181.50s. So we kind of have a very choppy flat open here. We will be looking for range breaks now. So we're going to be looking for range breaks here. Bitcoin has fallen all the way down to 72s. Gold is another big story of the day. Gold has fallen all the way down under 48.5s here. Under 48.5s. So gold is dumping down. Oil is trying to hold here. Here's the NASDAQ. We're going to expand this range that we have on the chart because this is what we're going to look at. I'll look at this range here. We're still in it. Look at that volume profile dip here. You see the volume? Like you can see exactly where we bounce here on the volume profile. Like, look at this. Look at this volume profile bounce right here. Still too close to the opening bell for me to trade, but we're waiting. All right, NASDAQ pushing back higher here. We're going green. Still watching 25,000 right here. Still pretty sideways though. A little rangy here. Here's oil push. Oil's at 97.6s. 97.6s right now. Oil's trying to get higher. Oil's still pushing here. Going towards the highs of the day now for WTI crude here. WTI crude getting close to the highs of the day. Up to almost $98 for oil. Brent crude well over 100 now, almost 110. Yeah, Brent crude up to 108 right now. Here's Brent, 108, the global standard of oil, well over $100 a barrel. Still waiting on the NASDAQ to give us something good to trade, but I'm going to short this a little bit here. It's pretty close to the bell, but I'm going to short. See if we get some fall downs here. There we go. Start to unload some of this as we get deeper into the volume profile here. See if we can add some more to this if it starts breaking down more. All right, there we go. More drops. Look at this. Gonna add a little bit to this now. I'm gonna cut it right here. I think it could bounce, but I'll give it a second. Slightly green since the bell, though. PPI numbers are big red on the screen. 0.5%. Previous 0.8% for core PPI. Headline PPI 3.4% on the year, 2.9% expected. Month over month was higher than expected as well. Headline month over month PPI was 0.7 versus 0.3%. All right, guys, here we go. Yeah, I just put the headline number up on the chat. Market already open. Yeah, real. You're probably delayed on the stream. Hit the live button next to the play button, dude. Put it in 2x speed. You'll catch up to the stream. All right, guys. We're up to 950s right now, 950s. Starting to fill some of this gap here. I'm looking at 25,000 above us. Silver's dead, gold is trash. Is silver dead, is gold trash here, guys? Let me know. What do you guys think? All right, so IDF says they're detecting launch of missiles from Iran and that they're working to intercept. That's not good. That's not good. Let's see what we get today, guys. That is not good. Look at the Nasdaq starting to fill the gap though. The Nasdaq's pushing here. Oil is still trying. Silver starting to rebound. So is gold, but I don't know if we have enough stabilization yet. We're still in the first 7-10 minutes of the open. So yeah, here's NVIDIA. So NVIDIA, since the opening bell, is at 181s right now. So NVIDIA, since the bell is down. Market could crash after the Fed meeting today. Hey, we'll see, brother. We'll see. I hope you're wrong, but you might not be. I don't know. We'll see. I hope you're wrong, though. Yeah, I hope you're wrong. I'm waiting to trade this, guys. I don't necessarily like the price action right now. I gotta wait for maybe a dip here. We have a broader range that we can look for in the Nasdaq, but so far we're green. We're about 10 minutes into the day. If we get a pullback to 950s, maybe. If we get a dip to 950s, we're slightly green on the day now. But I think if we get a dip to 950s, maybe we'll take a dip by here. We gotta kind of wait for it though. Yeah. Fed meeting is 2 p.m. Eastern Standard Time today. 2 p.m. All right, I will buy 50s if we get it, but I need 50s. I need right here. Maybe 40s. I gotta wait for it though. I might miss it. Yesterday we missed some trades, but I'd rather wait for the right moves first. So maybe we gotta wait for it though. Still gonna rip up. Here's 25,000, so I do think we need to watch 25K. I'm waiting for it though. I gotta wait for it here. Cup and handle pattern. Yeah, I mean, we've had a slow green, like a slow edge higher, but I have to wait for more meat on the move for a pullback, if that makes sense. So again, part of day trading is just patience here. Patience. So I still look at 950s for a dip. You know, you could also maybe argue 940s for the top of that previous range, but I'm looking for 950s, honestly. Considering the opening price action, are you guys bullish or bearish right now? Let me know. $985s. Here's 25,000. Yeah, I'm looking at 950s. If we get a dip to 950s, I'll take it. You can be bullish tomorrow. It's not that I'm bullish. I'm just looking at the trend we've seen since the opening bell in the first 14 or 15 minutes. There's 60s. There's 60s. Dead cat bounce, waiting for 25.40 as resistance. All right, so here's 50 right here. I'm gonna buy this dip now, and we'll take 4 contracts here, and maybe add one more if we get down to like 45s. My risk level is going to be around 30 down here, so we'll let it test. All right, there we go. Wondered if this is news related here though. I don't see any news. Trump waives the Jones Act in a bid to curb high fuel prices. I'm probably gonna have to cut it. We're using 30 as a risk, but we kind of retrace back up, so we'll give it a second and let it test. But yeah, we're probably gonna have to cut this, unfortunately. There's a very large pullback all of a sudden. All right, now we kind of retrace back up. I'm going to cut some size here now that we're basically flat and hold the last little bit here. There we go. We're going to cut it now. We are green on the day still. We'll hold the rest close to break even. Almost got faked out, but we let the test of 30 hold, which is good. There we go. We're gonna liquidate a little bit more. Hold the rest, see if we continue to rebound here. We'll hold the rest flat, so we're not gonna be losing on the day at all. So we get underneath our entry price, we'll cut it now. Yeah, so Bank of Canada leaves rates unchanged at 2.25% as expected. So the Bank of Canada did leave rates unchanged, 2.25%. Question, do I want to move my stop loss and add a contract to this? No, not yet. If I do add, I think I need to get closer to my entry just so I have a better average. Maybe I should have. There we go. I'm going to cut it right here and just get out. Take the green trade. So not a bad little green trade there. Maybe we'll look for another 35 or 30 pullback here. But green is good. Gotta love trading. Made profit shorting while John made profit going long in the same 2-minute time frame. Hey, listen. Trading is all about trade management. Coming from the top 3 worst trade manager out there. You love to see it. You love to see it. I should have held, honestly. Look at this trade here. Look at the NASDAQ pop. NASDAQ up to 25,000 right now. Let me see if we have any breaking news. So the Bank of Canada expects oil prices to push up inflation in the coming months. To look through war's immediate inflation impact, though, and we stand ready to respond as needed as the economy evolves. But again, Bank of Canada kept rates the same. Pause as expected, 2.25% as expected here. They stressed inflation risks from the conflict, but said they would wait and see, basically. Here's 25,000 here, so we're looking at 25,000. It is the line we have on our chart. I kind of want to buy a micro pullback in momentum here, though. Let's see. All right, we'll buy it here. See if we can scalp this. There we go. All right, we'll cut this almost immediately up there, just because I like that little follow through momentum. Like we tap a big level, we dip small. We could hold this close to break even now, but I want to give it a chance to break 25,000 here, to be honest. We tapped 25K. Looks like we're struggling to break over it though. All right, we're gonna cut it. Still green on the day, but waiting. Yeah, I think maybe you could argue this dip, but I'm not. I gotta wait. Yeah, we're not. Look, we're not cutting rates today. Yeah, choppy, of course. I mean, this is what's expected here today, though. We're gonna be choppy most of the time. Ahead of the FOMC decision. We got a little range that we can watch for a break of, though. So we do have some range that we can look for. Again, if you want to check out Apex, check out Apex's new changes, though. So Apex recently unveiled, and their sale ends tomorrow, so you get 85 to 90% off depending on which challenge you pick here. They have one and a half days left here. But check them out. No end-of-day drawdown. No, they have an end-of-day drawdown now. No payout denials. No MAE rule. No 5-1 risk reward rule. Built-in scaling and 50% consistency only once you're funded. So the good thing about Apex is, like, if you look at some of this stuff, if you use the end-of-day drawdown, it's 26 bucks. If you use the intraday trail, it's only 1770s here. And the good thing about this is that you can pass it in one trade. You know, these are cheapest accounts in the game, and you can pass them in one trade. I don't know if that's the right move to try to, but if you want to get funded quickly, you know, it might be a good move. I think they're also going to be doing direct to funded soon with Apex. And so cheapest accounts in the game, if you want some cheap accounts to learn how to day trade with and potentially get funded and try to start taking payouts, Apex might be a good rule. And most day traders lose money, so limiting your risk with cheap accounts I think makes sense. Gives you some pressure to learn and succeed with, or maybe fail with, but it's not the full extent of funding your own account thousands of dollars trying to look cool in markets here. And so I'll put this link up again. You can help support the channel. There's the link. NASDAQ very rangy right now ahead of the Fed meeting. We've gotten one green trade, one red trade since the opening bell. Very choppy range as of now. Bank of Canada paused rates. And they basically said that if energy prices stay high, we will not let the effects broaden and become persistent inflation. I don't know if that means they're going to start raising rates, but maybe. Still looking at the NASDAQ flush. Nvidia flushing down, technically red on the day. But the NASDAQ is starting to flush down here. There's 940s. Look at the red show up here. We did get news that Gulf producers are evacuating multiple sites after the warnings. I mean, yeah, you can lose money trading. Everybody can, of course. Most day traders lose, actually. But most day traders are going to lose. Don't get me wrong here. Most day traders lose. But yeah. Just be careful. Alright, we're at 940s here. Yeah, use coupon code BT on Lucid or Apex. Help support the channel. We appreciate it. You guys red or green so far today ahead of the FOMC decision? Red or green? Yeah, Powell speaks at 2:30, but we're going to be pausing rates today, probably. So just be careful. All right, so we got a recovery bounce and then immediately dipping back down here. I want to short, but I also think I want to short here, but I also think a short's the easy bet, but I also think we could chop. If we retrace up, I'll maybe short a little bit at 950s now. Close enough here. I'll short this. Start small and add to it if we go green. Keep it small if we're not. There we go. That looks better. We'll add a little bit to this now. Take 4 contracts. See if we start to really flush down. There we go. Take half off immediately. Lock it in. And then hold the less to see what we get. See if we get a broader breakdown here. Honestly, we're kind of fake outish today, though. We're going up and down and up and down. So I don't know if it's necessarily easy. Let's see if we reject right here. Yeah, there we go. 950s. But we're kind of flat on this trade now. And again, I think we might just be chopping ahead of the FOMC today. All right, we're being patient here. We're holding. We got a little profit on the day anyway, so. Push it back down. I'll wait and see if we get pushed down some more here. There we go. We're now green. The range is still pretty small on the day, though. Take half off there. We'll let the rest one ride a little longer. Yeah, I mean, we're not going to be hiking today. We're not going to be raising rates today. We're not going to be cutting today either. I appreciate the donation, though, the 10 euros. Look at historical chart. Fed hike before the summer bull run starts in April, so that's why I'm bearish. Only FOMC because bull run is around the corner. Maybe, and I think you could also argue... I appreciate the donation. I think you could also argue that we're going to get hawkishness in markets right now, and that markets fear hawkishness. We're going to get hawkishness by the Fed, and that markets fear hawkishness. You know, so I think we're going to get hawkishness, and the markets are probably going to be fearful of it, if that makes sense. Probably. We'll see, though. Yeah, I'm kind of sitting in this here. I want to see if we break down. I can maybe add to this and take a little bit more risk on the day here. We'll take 4 or 5 contracts now, see if we flush right back down. Give it a second. We're just kind of choppy today is what I'm seeing right now in markets, to be honest. So we'll probably save our equity if this doesn't work and just kind of wait. We'll give it a second to come back down though. Well, I mean, I'm looking for a rejection here. There we go. There's somewhat of one. But see if we break down now. Let's set it by size here. That way I can be a little bit more loose on the rest. Green on the day still, but waiting to see if we get this breakdown. Very choppy range though since the opening bell, to be honest here. Very, very choppy. I think the range is very small. We can wait for the range to break, but who knows when that's going to be. And remember, we do have the FOMC decision later on today, so it's not small. Yeah, we got factory orders at 9. I don't know if those are going to really move anything, though. We'll see. But, or at 10 o'clock, I mean. So they showed up at 0.1% as expected, basically flat for factory orders. There we go. I'm gonna start cutting profit here. Waiting for the breakdown now. Look at this drop. Let me get some more here. There we go. I'm gonna cut it right there. All right, so yeah, we're up hundreds of the day, which is nice. We'll give it some time though. Yeah, factory order showed up flat. Previously with a negative 0.7, they showed up at 0.1%. But yeah, I'm gonna get out of here, guys. Listen. before I close, let me know if you're red or green on the day. And remember, we do have the FOMC meeting. And remember, at 2 p.m., we have the FOMC decision. It's going to be a pause, but we are going to review the summary of economic projections, and that might move markets. So we're going to get economic projections by the Federal Reserve today, 2 p.m. That might move markets. We are also going to get Jerome Powell's press conference and speech where he talks about everything live. And that might move markets as well. We're going to pause today, remember, but that might be interesting here. So again, before I leave, are you red or green right now, Chad? Are you red or green? Let me know. Red on screen, green and average. Rates dropping. Green, but could be more without that tweet. The sound of silence. Yeah, hey. NASDAQ very flat. Not really easy money here. It's kind of boring. But yeah, we're going to do the FOMC decision, guys. If you haven't already, subscribe. Hit the notification bell. We appreciate it. And yeah, PPI inflation data is out already. So bloodish, green. Mostly greens today. Hey, good job, guys. Good job. All right, chat. I expect you guys here for the rate decision. I expect you guys to be here. Waiting. Ready. Waiting. Again, we get the summary of economic projections and more live at 8:30. So I expect you guys to be here. I'll see you guys over there. Y'all be good. Have a great day. Again, check out Lucid. You want to help support the channel? Check out Apex code BT. Beginner Trading BT. Great way to help support us. I'll see you guys later. Y'all have a great day. I'll see you guys in a couple hours here. We're going to be doing the Fed decision.